Mining Weekly Online is talking to Chris Griffith, the CEO of Kumba Iron Ore, which has just presented a spectacular set of interim results. Hi Chris. 70 million tonnes by 2019, you're reaffirming that with some degree of confidence. Can you take us through where that ore will come from?
Martin, most of the 20 million tonnes, so what we've said is we've got another 29 million tonnes up on our current production. 9 million tonnes will come from the Kolomela project, very nicely underway, and should already start delivering next year. Full production of that project in 2013. Then in addition to that, we see where we have a possibility of about another 20 million tonnes, 15 from the Northern Cape and another 5 million tonnes from the Limpopo. Now, in the Limpopo province, really two projects, the Phoenix project, which will take over from Taba, and another project called Centrifuge Poort, which has the potential at the moment somewhere between 2.5 and 3 million tonnes. That could even grow later depending on if there's additional capacity on the rail line. But the big expansion comes from the Northern Cape, and there we see that we have about 15 million tonnes per annum is about the right level to target. We've got potential projects of somewhere between 20 and 25 million tonnes. And given the way that the normal project pipeline, you expect to see some of those fall out. And so we think 15 million tonnes is a good number. That'll come from existing projects at Sishen, so making use of mostly lower grade ores. So some of that is the very fine ore that we're currently pumping out to the slimes dams. Some of that will be 3 to 4 million tonnes. We're likely to be able to extract that with better technology, and then you are able to use the fines. Then we've got to have a technology to bundle that together again so that you can actually ship it. And then at the same time, there's also other lower grade projects at Sishen, but then we have another potential project at Kolomela. At the moment, Kolomela is a direct shipping ore, so pretty much you dig it out, put it through crushing and screening, get it to the right size, and send it off at the grade that you're digging it out at. But there's another beneficiable ore that means we'll have to build a new beneficiation plant at Kolomela like we've got at Sishen. So this is very technology we're used to. We could put another beneficiation plant in place and probably get another 6 odd million tonnes extra at Kolomela. So really a blend of different kinds of projects, but mostly using sort of lower grade ores in the Northern Cape.
And what is all this going to cost you? What is the capex outlook on all this?
Yeah, that's a good question, and it's something that we're considering. If you just have a look at the capital intensity that we're talking about now, of about $200 per annual ton, you can see that. Well, give you an example. At the moment, Kolomela is coming in at quite low capital intensities of 8.5 billion rand for 9 million tons. So it's likely to be probably likely to be 2 or 3 times that. So this is very significant. This could be 20-30 billion rands worth of capital, but could create, each time you spend that kind of capital, you create not only the direct jobs that'll come from these expansions. If you have a look at the Kolomela project, that'll be roughly 1,000 jobs. So at this point in time, probably about 850, probably increased to about 1,000 jobs for that 9 million tonnes. But that's at very low beneficiation. So a new project with beneficiation will require more people. So this will be great for job creation in the Northern Cape, and that's why this is the right thing to do, to expand in the Northern Cape, put in place the Transnet rail, put the infrastructure in place so the mining companies can grow. Great for job creation, but not only the direct jobs. You can imagine all of the other multiplier effect of the jobs in the construction, the skills that you're teaching people. This is great for the country. Very significant tax benefits go to the government. Everything's looking good at the moment that when we start producing next year, the rail line, the locomotives, the rolling stock should all be in place. At the moment, it's all looking fine. So what we've been talking about is the expansion beyond that. So actually all areas of the business in Transnet's engagement with us, we have had a good and are having a good success story with them.
And beyond the 60 million tonne infrastructure, do you think there may be a new formula that has been hinted at of some sort of private sector participation?
It's not all that clear, but the fact is that if mines are open, both on the client and on Transnet side, to consider these things, I think that's the right way to go about it. So that if you have open-minded conversations about what is the right level of participation in the infrastructure, is there any opportunity for the users of the line to be involved with the operations? I mean, we have made it clear, for many years now that users would like to be I mean, I think first prize would be we would like to operate the line. I think that is highly unlikely. But if there was an opportunity for us to participate in the line, if we're going to be contributing capital, I think those are the kind of things that, if we keep an open mind to those kind of opportunities, I think we have a better chance of success.
What about your shipping?
Transnet have been doing fine on the port. When we start getting to 60 million tonnes, that's always the capacity. So, as we start getting to 60 million tonnes in 2012 and 13, that's going to show us what really, how much that port can do. But at this point in time, it's got the capacity to deal with that 60 million tonnes. On our side, on the shipping, things are going fine. Shipping is a very real part of our business. A few years ago, it was a strategy of the company only to be a miner of iron ore, and you just took your ore to the port and someone else looked after the shipping. We have changed our strategy over the last few years to be part of that whole value chain. We have made a lot of money for our shareholders over the last couple of years by participating in the value chain, by participating in shipping. I think we made another almost 190 million rands worth of profit in this year. Even though the freight rates have come down so much, we still are adding something extra to the shareholders by participating in the shipping. But what we've now done, the question you've asked is, we have now had a look at, because the freight rates are the lowest they've been for donkey's years, and this is the time that we believe that it's the right time to lock in a long-term rate. So the plan at the moment that we have been discussing, we have now signed an agreement with a shipping company, a very well-known shipping company in Germany, for a 10-year contract of affreightment, and that's just really locking in your volume of 4 million tonnes per annum. But that's only a portion of the portfolio of freight instruments that we seek to have in place in the next few years.
And then you're also looking to Africa in general and West Africa in particular.
We think there's still a possibility to grow our South African operations by another 20 million tonnes after Kolomela. So we're not giving up on that. And we're saying to ourselves, well, what else should we be doing? And I think it's the right thing for us to think about as an African mining company, that we think that we're best placed to be able to succeed on the African continent, and for that reason believe that we should be looking outside South Africa, and have given ourselves a target of between 10 and 20 million tonnes by 2020 in West Africa.
And swinging back to the people of Africa, there seems to be a lot of wealth creation, 11 billion rand going into previously disadvantaged South African circles.
Just since 2006, we have given back 11 billion rands worth of cash to the shareholders. Originally, it was anticipated that our 3% community shareholding would take 10 years to pay off their loan. After 4 years, at the end of 2010, the BEE-CA, the community trust, had already redeemed its loan. So after 4 years, they paid back their loan. The dividend that they received for the end of 2010 that they received in March was 240 million rand, the dividend. They're now going to receive another 280 million rands worth of dividend. So within the space of 1 year, they're going to have over 500 million rand to actually invest in their own community projects. In addition to that, their value, the stake that they now own unencumbered in our company, is over 5 billion rands worth. And that's just our 3% shareholder. You have a look at the Exxaro, how they've been able to grow, how they've been able to invest because of what they've been given back. Our employees who own the other 3% stake. I mean, this is a fantastic story. They've already, because they get a bigger dividend, but at the end of the 5 years, they pay back their loan. Now, the end of the 5 years comes at the end of this year. At the end of this year, we're going to be paying out, if the share price stays where it is today, somewhere between 450 and 500,000 rand per employee if you've been with us since the inception. That's of course pre-tax, but you think about how phenomenal that is. And we think that there's not any other either community scheme, BEE shareholder or employee scheme that's delivering this kind of value. This is real value being delivered by real mining companies in South Africa.
What you refer to as the ultra-class mining equipment, does this give a leg up to production?
We now need to strip much more bigger volumes of waste. So the plan is that so in that kind of environment, you want to put big monster equipment in there that can just keep mining and you can get the best absolute efficiencies. In the pit itself, where the ore is quite complex, you need to have smaller equipment. But on the waste, where it's just a volume game, you want the biggest mining equipment that's suited to this, to the kind of conditions that we have. But that's what we talk about, the ultra-class equipment. So we're moving up to the biggest mining trucks, the biggest shovels around. So you'll see more PC8000s, you'll see more of these 330 to 360 ton per truck class. So that's the kind of beasts that we're looking to put in to be able to help us bring the cost of the overall waste stripping down by just using massive efficiencies.
The dumps that are created, is there any possibility of getting value out of those in time?
As we get closer to the ore itself, there's sort of different grades as you get to the good ore. Now that stuff, in the past we have stockpiled, we stockpile it separately. And the B grade, that's exactly where we put new technology in. So we did a lot of R&D, put new technology in, and we were able to beneficiate lower grade material, and that's what the jig plant's all about. So we put new technology in, used lower grade material, and now 34% of all of the value of this company's come from stuff that they previously declared waste. Who knows what the next set of technology is? And actually my technology team, that's their task, to say, well, find us a technology of now the third level of, or third grade of ore that in the future we need to have a solution for. So our technology team, our R&D team is doing exactly that, saying, well, now we've got all these stockpiles of what we call C grade ore. At the moment it's considered waste, but how do we get the technology in there to upgrade that at a cost-effective manner so that we can sell that as iron ore?
That was Chris Griffith, the CEO of Kumba Iron Ore, a company which is going to produce 70 million tons of ore a year from 2019 and is also looking for a new footprint in Africa.